Good evening, everyone. What a day! What a day! Today we had a massive sell-off in risk following the FOMC on Wednesday, where we rallied. So I want to take a look at the carnage that happened because tomorrow is NFPs. So that's another market mover that's going to happen. So let's see what we can do on Friday and prepare for next week, perhaps. So. This was Monday, I think, right? On Monday, I made a post saying that we trapped the newly established shorts and that we should be going long. In fact, I can S&P trapped shorts, bullish Tuesday, blah blah blah. So on Monday, lots of trapped shorts. I indicated, and that we're gonna have a bullish Tuesday FOMC, and then a sell-off. Yeah. Sorry, that's exactly what happened. So we rallied to the previous swing high resistance and massive sell-off. Honestly, a lot of people got caught by surprise because what this market did. Let's actually examine the price action, because by examining the price action, you are able to prevent yourself from entering shitty trades. Because this was apparent to me. The fact that Wednesday was a FOMC and now you have a liquidity grab. A liquidity grab basically is professional money market makers. They know that they all know that how other people trade, right? So in the textbook technical analysis, the breakout traders would be they would have their orders here below this level, right? So if they put it at 1 pip below, 1 point below, 5 points below, whatever, the market makers push the price action beyond that zone to trigger those sell stop orders, and then they cover their positions and turn around. And that's exactly what happened. So a lot of retail novice, inexperienced traders, they're like, oh my god, this is a continuation of a sell-off, rock and roll, blah blah blah, right? Because they didn't see this bar like this. This bar at some point looked like this one, and because it looked like this one, everybody assumed let's hop on that short ride because we're going to zero. Or whatever, wherever is the next level, right? So this is a major level. You can see here, it's been here for quite some time. So they were expecting maybe, we're going to below 4,000 basically, and lo and behold, we did not, because again, as I posted in my post, this was a trap, and this was them getting stopped out. All right, but what happened next is even more brutal. What happened today? Because everybody expected, the Fed is a little more dovish. They are engineering the soft landing and other nonsense, and lo and behold, now people who were long are now getting stopped out. They're like, this is it. This is the bottom. We can finally the game of musical chairs can resume, and we're going to new highs, and everything is well, and blah 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 blah, because the rate hike was priced in. So we will be able to buy now as a follow through and ride it here, or even to retest the highs. But it did not happen, right? So now all the people who were long on Wednesday, they're still holding their positions. They're thinking this thing is going to keep on running, and the market makers push it down. So basically, they use this pullback to offload their positions. They're reducing their exposure to stock market, and they're rotating into bonds. Look at the 10-year yield. You can see that the yield is rising nonstop. This is a daily chart. You can take a look at the weekly chart. So you can see that this was FOMC Wednesday, I think. or here. And then, yeah, right. Yesterday we rallied already. So as you can see, the yields keep on rising because they're pricing in inflation. So the Fed will actually have to. The Federal Reserve is playing catch up at this point, and they're late to the party. So the game of musical chairs might not be continuing as planned, at least not yet. Also, I was made this post for, well, let's see where, Bear Flag Country. Looky here, boom, exactly to where my arrow. Well, this arrow was drawn. This wasn't done on purpose, obviously. But I mean, the length of this arrow was not. I just drew it, but it just coincided with the bottom, and this is how it looks now on a 4-hour basis. So basically, we had a breakdown. The one I said we should be selling, and in our signals, we were selling it. I was selling it on all my accounts, all my clients' accounts, and all the apexbull inner circle people were shorting this as well. So now we again, looky here, we just broke down again. Given that tomorrow is NFP and it's Asian session now, I don't think we're going to have a huge move. I think everybody's going to be waiting at least till London, and London might probe range high, range low, but it's also not going to be committing too much because NFP is a big event, a big mover for the market. So you're not going to be committing a lot of capital just to get stuck in. It's basically a 50-50 crapshoot. So professional traders don't put trades before major economic news unless they know something. So this is Nasdaq, US 30, Dow Jones. They're all pretty much trading in the same range. So you can see that 1, 2, 3, and this is the bottom. We're testing the bottom. So I can easily see something like this. We can easily grab, make a new low, take out this. Well, you know what? Let me actually make it proper. So I think there is a very good chance we're gonna, in all of this move, as you can see, we make a lower low, we retrace. We make a lower low, not far away, not well. This is the beginning of the move, so a little further away. But you can see now we're getting shorter and shorter and shorter. So maybe we're gonna dip, grab the liquidity, and do another turnaround. So I can definitely see us doing some kind of range play tomorrow, at least before NFPs. So what does it mean? I'm not going to be selling. I'm cautious. I could try longs. Let me actually grab the tool. So I think we can grab the liquidity and then turn around prior to the NFPs. That's what that's quite a possibility. Again, we just have a momentum switch. Well, it's still you have to wait for the candle to close, but we're waiting. If this candle closes negative, this is a momentum switch. So highly likely we're gonna take out stops because there is some longs still here sitting, and their stops are here. If you went long above this bar on the Fed news or whatever, whenever it was, this was Monday, so the Monday trap. So if you went long when on this bar after seeing this pin bar, let's say on the open on the next day, you went long. We did go long. So again, in our signals, we banked not all of this move, but some of this move. So if you went long and you're targeting 1 to 1, 1 to 2, your stops are here. It's not a fact that you took profit around these highs. Maybe you did if you were smart, or at least partial. Some people who are longer term traders, they thought that this is a perfect opportunity for a swing trade that might play out or a position trade that can play out for another week or two. with the market pulling back like it did here. And so their stops are here. So very highly likely we're gonna, as you can see, we made a new. This was the low. We probed the low, and then we reversed. I mean, it's everywhere, everywhere, everywhere. It's not making long sustainable moves after it makes a new low. So as we were looking on the 4-hour charts, at least, right? New low, new low, new low, new low, but always a pullback, always a retracement. Not terrible. You can actually get out if you know what you're doing. You can actually get out of these positions, at least break even, without sustaining a huge loss. Again, you have to be careful with that. So here now, I think we can, very highly possible we're gonna do some damage to those longs, and again, new shorts will be like, oh my god, this is super bearish candle like this one here, and we're gonna have a follow through, and we're gonna have and I think that this support might have another chance of holding, because tomorrow is Friday, so nobody's going to be committing a huge amount of capital on Friday. They might push the price down, but then they're going to close their positions, and the price will be retreating back up. So that's basically what I'm thinking. We're going to dip, to run the stops, to grab liquidity, and turn around. Now, Bitcoin, for example, is... So I guess I was making some posts on Bitcoin too. You can see that we're in this channel. So a moment of truth, hold the support or breakdown. So I basically said either close above this trend line and have a follow through, meaning take out the candle top, which we didn't, or close below. By the way, we were still here. None of this was here, right? So this is why this arrow goes from this bar. So this was the bar that was still the last bar. Anyway, so now that we broke down, it looks like we're gonna have a follow through, because this is a typical bear flag. So pole and a flag and a continuation pattern. So it's not a good sign for risk on Bitcoin. ETH looking the same. I'm not even going to talk about shit coins. Waste of time for now, for me at least. So this is, again, a lot of people were buying the support here, and this is their stops. This is liquidation, especially the people who trade on leverage, right? So that's Bitcoin. I'm short. I should do, well, not me, my algo, the algorithm that we run in a fund for our clients and for our customers at apexbull. We went short on this. The algorithm that trades it went short today, and we are in profit already. So let's take a look at gold. Gold is another example. So I made a post on gold early in the morning today. See how it looked? How can I make it bigger? There we go. So I said basically by the breakout retest. I was making a video and I said that don't leave an order here. You have to wait for a bounce around this area, because if it goes back into the channel, it becomes bearish again. And that it actually did go back into the channel. So what do you do with gold now? Well, this bar, it looks disgusting. As you can see, it was a super bullish bar that became a super bearish bar, and now we're getting a follow-through reversal. Quite possibly we're going to roll over and retest this triangle here, this trend line. You see this trend line here? I think that's where we're going. And I made a video and a post last week basically saying that's where I'll be interested in buying, around 1830, 1820 area. This is going to be a sweet, nice confluence of support here, and at least a temporary attempt by bulls will be made. Whether or not it's going to be short-lived, I don't know. But buyers are waiting for this point right here. So I'm just patient with gold. As you can see, this is why you have to wait for candles to close, because if you don't wait for candles to close, this thing was looking super bullish. It was looking like one of these candles, like this one or this one. And then you see how it ended. So don't rush into trades without waiting for candles to close. It's super important. And now it looks like we're going to take out the lows and we can roll over easily. And hello, 1830s, 1820s in gold. So US dollar. Dollar is probing. Well, actually broke out, right? So we had a breakout. We retested the breakout and the top here. So if we actually start rallying tomorrow and we take out the stop, you can actually go long on the dollar, be it via euro or a pound. Pound got clobbered today on BOE, by the way, or Aussie, New Zealand, doesn't matter. This obviously, if we're gonna start falling back in, I think that's we can also have a possibility for a move this. So we're basically consolidating below the resistance. So that's a good sign. If we have another couple of bars like this before FOMC, and then we start shooting up on the closing basis, that means it's a breakout. It's a legit breakout on a Friday. And usually those breakouts follow through the next week. So that's going to be a sweet setup if it comes through. But even if we, let's say some whatever happens in NFPs tomorrow, we get a pullback here. That's another great area just to buy the range. Easy play, I think. So I think we're going to be in a ranging environment. It's May. People are weird shit is going to start happening as sell in May and go away starts happening. So we'll see. But I think if stocks are of any indication, we can see that this is becoming a nasty chop fest where everybody's getting taken for a ride. Anyway, you're more than welcome to stop by a free Telegram group and we can discuss this further. A bunch of traders hang out there, so stop by or check us out at apexbull.com. Hope it helps. Enjoy.